Bill, the enthusiasm that drove the Dow Industrials to record close 12 times in a row last month and 21,115 just last week has been described two ways, right? Animal spirits on the one hand, sugar high on the other. Which camp are you in?
Well, I think sugar high, Eric. Animal spirits obviously in the market, not necessarily animal spirits in the economy. As we know, the economy is only growing at 1.5% to 2% at the moment, with hopes for 3 to 4%. But I think future market gains in stocks and higher interest rates are dependent on whether the old new normal phrase originated in 2009 is being replaced by what I would call the old usual, a period of 3 decades pre-Lehman Brothers, 3 to 4% real growth and significantly higher inflation than in recent years. And the old usual benefited from globalization and strong labor growth and expanding credit that was lightly levered in comparison to today. We had productivity at 3%, much higher levels of investment, and it's hard for me to believe in terms of the stock market that the U.S. and indeed the global economy can return to those halcyon days anytime soon. Are you expecting a sell-off? We've already seen in the past week something of a sell-off, or the beginnings of a sell-off in high yield. Oh, I don't think so. It's hard to step in front of a moving freight train, especially if it's moving at 100 miles an hour. So it's best to avoid it, and it's hard to call for a significant decline in stocks based upon continued expectations of brighter days ahead. I do think deregulation. I do think corporate tax cuts. I do think perhaps infrastructure spending will improve economic growth to perhaps 2 to 2.5%. But the market expects 3 to 4, and that's what I think caps it in terms of those expectations. Corporate profits don't grow very much in a 1 to 2% real GDP environment, and I think we're in those periods of time. Bill, how much headline risk is there in Washington right now? Oh, there's a lot. Not just in Washington, but globally. Headline risk in terms of, health care, headline risk in terms of the tax plan, the deficit spending, how large will they be? No one really knows. There's headline spending, of course, globally in terms of hotspots such as North Korea and Euroland in terms of elections, Italy and France. And so, lots of headline risk that investors up until this point have avoided because simply the momentum, the expectation for 3 to 4% growth consistently going forward without any problems, I think has carried us to this point. But I would be very careful from this point, not necessarily expecting a 10% decline, but expecting very low returns from this point forward. How much headline risk is there in President Trump's Twitter account? Yeah, I don't know. Investors have come to expect very strange Twitters out of President Trump. So not necessarily out of the Twitter account. I would think headline risk would come out of Paul Ryan these days in terms of whether he can put together a health care package, whether he can put together a plan for a semblance of budget balance, which I don't think he can. And so I think it comes out of Congress as opposed to Trump. We're expecting strange Twitters from Trump anytime soon.